All right, guys, Tesla just released literally a minute ago. They were expected to do 86 cents EPS. They did 85 cents earnings per share. They're expected to do $23.4 billion in revenue. They did 23.33. So they missed on both. They're currently down 1.45%, 1.66%. Guys, remember, if you're new to this channel, we want you to know, we don't look at quarterly earnings as anything other than people's desire to exaggerate. Yesterday, who reported yesterday that went down like... Netflix reported yesterday. They were down 14%. They ended aftermarket even. It was insane. Why? Because they reported bad numbers for what they were supposed to get in terms of new users, and then they skyrocketed when they said, oh, but we still expect the year to be okay. Guys, you're telling me Netflix changed 14% in a matter of a few hours because of a couple words said? Come on. If that doesn't tell you how irrational markets are, I don't know what is. It's not like they went from, hey, we're going to make $3 a share, we lost $6 a share, and we think we're going under. No, they literally beat on both revenue and profit, I think, and they just missed on new subscribers. Tesla this morning, and I said to Mo this morning, they lowered their price of their cars for the 6th time this year. And I said this morning, could this be an indication they missed on their numbers tonight? Now, they didn't miss as much as I thought they did, because I thought maybe they missed so bad. What was that?
You thought it was going to be a big miss.
I thought
it was going to be a big miss.
I thought to myself, like the day of earnings, you're announcing a cut. Now, somebody made a good point. Well, maybe they're cutting prices because their costs are going down. Maybe. But you would hear that immediately. We are cutting costs because our costs are going down. We want to pass the savings on to the end user. So, on this channel, we don't care about these quarterly reports. What we care about is the long-term value of the business. Tesla will be here for a long time. But the question is, and they make a phenomenal car. But the question is, can you pay a reasonable price for Tesla? Don't believe the old adage that you buy what you like. It has to go one step further. Buy what you like at a reasonable price. That's the big thing. Everybody else thinks, oh, I love Amazon, I love Tesla, let me buy their stock. Well, that's how you get stocks to nosebleed levels. Tesla's now down 1.5%. But let's look at the history of Tesla. On November 4th, 2021, they hit a high of 414. January 6th of this year, they're at 101. Boy, oh boy. And now they're at 177, 178. They're up 77% from the start of the year, from January 6th. Look at this. 3 months up 41.9%, year to date 67%. It is incredible. Now, some things. Market cap, $591 billion. Mo, look at this. Enterprise value of $605.
Wow.
That's very low for a car company.
For sure.
This difference here of $14 billion is essentially their debt, their net debt after cash.
Especially a new car company like
yes,
them.
This is incredible. I love this. The difference here, very low. I love it. Now, one thing I don't like, the price to sales ratio. Okay, guys, I'm going to let you in on a little secret. When a company makes 88% of its revenue from selling cars, you know what we call that, Mo?
A tech company.
He's wrong.
I was ready for that one.
We call it a car company. Tesla is a car company. Every other Tesla bull wants to hide it behind tech because they realize how ridiculous the valuation is. Tesla is I almost just said it right there, is a car company. And the average car company, their price to sales ratio is 0.5 to 1. And they're at 7.25. Now,
I pulled some up here just for reference. So
Toyota.
So here's Ford first.
0.31.
Toyota.
GM.
0.31.
0.31. Toyota.
0.71.
Okay.
Yeah.
Now, Ferrari is a very high-end car company, and they're 9 to 1. But look at their gross profit margin, 48% and 20% bottom line margin. And by the way, Ferrari is overpriced, spoiler alert. But look at the saying, guys, their gross margin is half of Ferrari's. Their 5-year profit margin is less than half of Ferrari's, and their current profit margin is only 75% of Ferrari's. Okay, and they're trying to make 1,000,008 cars a year. Tesla is. Ferrari makes 13,000 cars a year. Guys, I just don't get this valuation. I don't get the valuation of Ferrari either, so don't get me wrong. But Ferrari shouldn't be selling for 9 times sales either. And Tesla shouldn't be selling for 7 times sales. Yeah. The 5-year return on invested capital is 6.7. I'm not as worried about that.
No, this year's good though. 1 year.
But 1 year is 17.7.
Yeah.
Now, for those of you who are new, there's a lot of numbers I'm throwing out there. And it can sound overwhelming. Don't worry. It gets a lot easier as you listen to more videos. So make sure you subscribe and listen to the videos. And if you're interested in the software here, go to everythingmoney.com and check it out. For a little over $1 a day, you can have this software with the community and learn a ton of stuff. But this return on invested capital, especially for a growing company, I like. Because it says to me, as they invest more and more money in the business, they get a higher return on that money. 17.7%. What are Ford? Can you pull up Ford and those guys? I'm sure it's abysmal. This is a great thing. I want Tesla to be the anti-car company.
So Ford's 5-year return on invested capital is 6.2%.
And their current year is 8.1.
8.1.
That's terrible.
Let's go to Toyota.
3.7 current year, 4. Okay.
GM.
So Tesla deserves an increased valuation for that reason.
GM is
that
the
alone.
worst.
They deserve that just for that alone. So I will give them that completely. But again, how much? How much is enough for them? They're still down about 1%, hanging on there. All right, let's go see what the 8 pillars look like. And they're crap. Yeah. I'm not worried about this. This to me is basically a check mark. I'm not worried about that. These are the big ones. They're selling for 174 times the last 5 years' profit, 205 times the last year's free cash flow, the last 5 years. Their current PE is 47. Okay. Current PE is 47. Okay. That's hard.
Better than 70.
Better than 70. Isn't that funny? By the way, Meet Kevin said the PE for Tesla should be 70.
In 2030.
30. Yeah. Meet Kevin's a moron. So anyhow, Mo, you have some operational summary from their actual press release.
Yeah, so I have the deliveries up here. So Q1 deliveries of the Model S and X, 19,437. Model 3 and Y, 421,371, 441,000 cars. Now, this is the big thing, I think, right down here. And what gives them, people talk about like Rivian and Lucid and all of these, even Ford and Porsche and them being big players in the game. This is what gives them the big win. Supercharging connectors. You can charge all over, you can go all over the country, and
Tesla's a great network. Tesla's a great car company.
Flawlessly.
Elon Musk is a genius.
Done it many
I love
times.
every second of them. I can't wait till they're selling for a price that I can buy them at, but I don't think that's today. Let's go see what analysts think.
I saw the best thing on CNBC about
So look at this, Mo.
Tesla.
Analysts only have Tesla's profit doubling in the next 4 years, which is still a lot, by the way. It's still
a lot,
18% growth rate per year, but I thought it'd be higher than that. And their revenue, over doubling in the next 4 years. So they still have a lot of growth potential. So the question is, though, what's the reasonable price? And this is what we're going to do with our stock analyzer tool. And the most important and most popular part of our website. I'm going to do a 20-year analysis. You can do 1 to 20. Mo's going to do, now Tesla's down 3%.
Yeah.
They must have said something.
yeah, something must have come out.
Yeah. So I'm going to look at this company and we're going to put some assumptions in. We're going to try to decide, we're going to talk about it out loud as I go through it, because Mo, we can't both talk at the same time. And I tend to hog conversations, so I will continue to do so right here.
Can I just say one thing?
Yes.
So he calls himself Chief Executive Officer and Techno King of Tesla. Is that not the best thing ever? I love the guy.
And I love it how every single person who was so pro Tesla was all these like left-wing people, and now they hate him because they think he's some right-wing nut job.
He went after Twitter and
Yeah,
bought it and took over.
I love it.
and- yeah.
All right, so let's do I'm going to do a 20-year analysis. Mo's going to do 10 years. Now, 20 years, guys, let's do some numbers here. If they grew 15% a year for, what did they do last year in revenue?
Let's see. Give me 1 second.
81 billion?
billion.
81.5. It would take them to 1.3 trillion in revenue in 20 years at 15%.
That seems excessive.
That seems, and then let's say that. Let's do it this way. If the average car right now is 45,000 and it grows 3.5% a year for 20 years, that's $90,000 in 20 years. 1.3 trillion. I'm doing this math right here. That's million, billion, trillion divided by 90,000 is 15 million cars a year. Okay, I can see the path to that. I'm going to put that in there. That's going to be very difficult. Now, on the low side, I'm going to call it 5%, the middle, 10%. Even at 10%.
Did you say 15 million cars sold per year?
Yeah,
There's only 2.86 million sold in the United States each year.
that's incorrect.
Is it?
Yeah.
Okay.
No, there's way more than that.
Okay.
That's passenger cars.
What What do you
I'm
consider?
taking all cars.
All cars. Okay.
Yeah.
Okay.
All cars.
Okay.
Because they have SUVs, they have all that
Okay.
stuff.
Fair.
Now, at 10% growth a year for 20 years, they only need to grow to $500 million. Okay, that seems much more reasonable. Much more reasonable. Actually, it might be light. Actually, you know what? I'm going to do this.
Okay.
I'm glad we thought about this. I'm going to go 7, 11, and 15.
Okay.
Profit margin, I'm going to go 10. I'm going to go 14. I'm going to go 18. Let's say they become like Ferrari. Free cash flow. Oh, their free cash flow is so inconsistent. 7, 10, 13. PE. People are going to hate me on PE. All right, I'm done with my numbers. You done with yours, Mo?
Almost.
Go to Mo's screen real quick. I just want to scroll down and see what it looks like. Okay.
All right.
Now, the reason we do these high numbers is because we want to see, like, this is a pretty ridiculous number. 19 times earnings, 19 times free cash flow, profit margin they haven't done yet, free cash flow margin they haven't done yet, and a growth rate that makes them sell 15 million cars at $90,000 a car in 20 years. Okay. So, Mo, give me your first revenue growth numbers.
So I did 12, 17, and 22.
For the next 10 years.
For the next decade, yep.
For the next 20, I did 7, 11, and 15.
Okay.
Profit margin.
7, 11, 15.
I did 10, 14, 18.
Okay.
Free cash flow?
So I actually made it the same. Hopefully they even out over time.
Okay, I did 7, 10, and 13.
Okay.
PE?
16, 18, and 20.
I did 15, 17, 19.
All right.
Same with free cash flow.
And for my return, I did 12, 14, and 16.
I actually did 10, 12, and 14. Because I actually thought to myself, yeah, I would gladly buy Tesla at this. I've already beaten it up a ton. Like, I don't think 7% growth over the next 20 years per year is reasonable.
Is outrageous.
I hit the analyze button. Look at my numbers. A low price of 40 to 55, a high price of 135 to 188, a middle price of 76 to 106. And look where it's on my watch list, 60 bucks. I actually thought I was going to crush the numbers.
Yeah, I thought so too.
What's yours, Mose?
My low end is 42, high end 162, middle ground 90. It's on my watch list at 100.
This is my point for all you Tesla bulls out there. 15, all these numbers here, if you don't get how ridiculous this is, then you need to have your money taken away from you, flushed down the toilet, spent on hookers or cocaine, because it'd be far better spent than investing in Tesla based on these assumptions.
This is crazy. This high side, that would be very challenging for them to reach it, and you're still not there.
So if you hate me, tell me in the comments. If you think I'm a pompous, arrogant little prick, tell me in the comments. If you like me, find me on Twitter. Love me all day. Thank you very much, guys. I appreciate your time. And come next week, it's big earnings season. You'll see a lot more of us next week.